Did you know over 1 million Australian households are already teetering on the edge of mortgage stress? And by 2026, that number could explode, pushing millions of families to the brink of losing their homes. It's not a headline from a disaster movie, it's the real financial time bomb quietly ticking beneath Australia's housing market. Behind closed doors, families are skipping meals, cancelling medical appointments, and draining their savings just to stay afloat. And the scariest part? Many don't even know what's coming. With thousands of fixed-rate mortgages set to expire in the next 12-18 months, homeowners could soon face repayment jumps of up to 65% overnight. So what's causing this silent crisis? Who's most at risk? And more importantly, what can you do right now to protect yourself before it's too late? Stick around, because what you learn in the next few minutes could change everything. Number 1. The brewing storm. Australia's housing market is heading straight into dangerous territory, and most people don't even see it coming. Over the past 2 years, interest rates have skyrocketed at a pace we haven't seen in decades. The Reserve Bank of Australia has lifted rates from a record low of 0.1% in 2022 to over 4% by late 2024. That might sound like just numbers on paper, but for mortgage holders, it's meant hundreds, even thousands of dollars more every month. Combine that with rising grocery prices, electricity bills, and stagnant wages, and you've got a cost of living pressure cooker that's about to blow. What makes this situation even more dangerous is how suddenly it can spiral out of control. Many Australians locked in ultra-low fixed mortgage rates during the pandemic, thinking they'd bought themselves years of breathing room. But those deals are starting to expire. In the next 18 months, hundreds of thousands of families will see their repayments spike dramatically. Some will go from paying $2,000 a month to over $3,500 without any increase in income. That's not just stressful, it's unsustainable for the average household. The early signs of crisis are already here. Reports show more people falling behind on their loans, default rates inching up, and an increasing number of Australians turning to credit just to survive. But this is just the beginning. If rates stay high and incomes stay flat, or worse, if unemployment rises, the pressure will only get worse. This isn't just a housing issue. It's a national economic threat that could affect every part of life, from your neighborhood stability to the future of the entire property market. And the harsh truth? Most people still aren't preparing for what's coming. Number 2. Why 2026 changes everything. The real shock to the system is coming in 2026, and most homeowners don't even realize it. During the property boom of 2020 to 2022, nearly half of all new home loans in Australia were fixed at ultra-low interest rates. That gave millions of households a sense of safety, with predictable repayments and breathing room during uncertain times. But those fixed-rate periods weren't permanent. In fact, a massive wave of fixed loans is set to expire in late 2025 and throughout 2026. And when they do, borrowers will be thrown from the comfort of 2% interest rates into the harsh reality of rates above 6%, almost overnight. This looming shift is what economists are calling the mortgage cliff. And it's not just a small bump, it's a financial freefall that could catch entire households off guard. Imagine paying $2,000 a month for your mortgage, then suddenly owing over $3,500 with no warning, no raise, and no backup plan. That's the situation facing hundreds of thousands of families. The Australian Bureau of Statistics has already reported that nearly 880,000 loans will roll over by 2026. The fallout from that could be enormous, with many simply unable to keep up and forced to sell their homes or fall into arrears. What's especially alarming is how fast this is approaching. We're not talking about a problem 10 years away. It's just around the corner, and the financial system is not fully prepared. Banks are already tightening lending standards, property prices are softening in some suburbs, and investor confidence is beginning to waver. This isn't a hypothetical scenario anymore, it's a timeline. And unless households start preparing now, 2026 could mark one of the most painful turning points in Australia's housing history. Number 3. Who's most at risk? While the coming housing crunch could affect millions, some Australians are more vulnerable than others, and they might not even realise it yet. The highest risk group includes first home buyers who entered the market between 2020 and 2022, often with small deposits and big loans. These buyers were drawn in by low interest rates and government incentives, but many are now sitting on loans that stretch their finances to the limit. With interest rates rising and property values softening in some areas, they could soon find themselves in negative equity, owing more than their home is worth. Families in outer suburban or regional growth corridors are also on shaky ground. These areas saw massive price surges during the pandemic as people moved further out in search of affordable homes. But with long commutes, rising fuel costs, and limited job opportunities nearby, the cost of living is rising sharply for these households. Many took on large debts, assuming steady income and stable rates. But with expenses outpacing wages, their financial margins are disappearing fast. For some, even a minor increase in repayments could push them over the edge. Then there's the silent pressure building among middle-income households, people who don't consider themselves poor but aren't wealthy enough to absorb large shocks. These are dual-income families with children, car loans, school fees, and tight monthly budgets. They often live in areas where housing is expensive, meaning their mortgages are larger and their risk of default is higher. These households tend to suffer in silence, slowly draining savings, cutting back on essentials, and hoping for a change that may not come. If interest rates don't fall soon, or worse, if they rise again, these families could be forced to make devastating choices, including selling their homes. Number 4. What you can do now. The good news is, even in the face of this looming crisis, there are steps you can take today to protect yourself. The first and most important move is to review your mortgage terms. Now, not later. Check when your fixed rate period ends and speak to your lender about what your repayments will look like once it does. Don't assume you'll automatically be offered a competitive rate. In many cases, banks roll customers onto much higher revert rates. That could mean the difference between staying afloat or drowning in debt. If you're unsure, speak to a broker or financial advisor. Knowledge is your first line of defense. Next, consider refinancing or restructuring before the pressure hits. If you still have good credit and some equity in your home, now is the time to shop around. Don't wait until you're already struggling to negotiate better terms. Lenders are far more willing to help when you're proactive. If refinancing isn't an option, you might explore other strategies like extending your loan term, consolidating debts, or even downsizing if your current mortgage is no longer sustainable. These might feel like tough choices, but they're far better than being forced to sell in a panic market. Finally, build a financial buffer wherever possible. Even saving a small emergency fund, enough to cover 3 to 6 months of essential expenses, can give you breathing room if things tighten. Cut non-essential spending, avoid new debts, and focus on increasing your income if possible. Whether through a side hustle, freelancing, or upskilling, every bit counts. The reality is, the earlier you act, the more options you'll have. Waiting for the worst to happen isn't a plan, it's a gamble. And in this housing climate, it's one you can't afford to take. Number 5. Is a crash coming? With all the warning signs flashing, many Australians are asking the same question. Is the housing market about to crash? The truth is, what we're seeing isn't necessarily a sudden collapse, but rather a slow and painful squeeze. Experts say we're less likely to see property prices drop overnight and more likely to witness a prolonged period of financial pressure where households are slowly forced to sell, investors back out, and growth stalls. This slow motion strain might not make headlines every day, but its impact on families, communities, and the broader economy could be just as devastating. One of the major concerns is that while interest rates are high and repayments are rising, wages aren't keeping up. This creates a dangerous disconnect. Homeowners are being asked to pay more, but they're not earning more. At the same time, the rental market is becoming more competitive and expensive, which means even those who sell may struggle to find affordable alternatives. This can trigger a chain reaction. Distressed sales lead to falling prices, which affects neighboring property values, leading to more stress and more forced sales. It's a feedback loop that could take years to unwind. That said, a full-blown crash isn't guaranteed. Much depends on what the Reserve Bank does next, whether inflation slows, and if the government steps in with relief measures. But whether or not prices plummet, the pressure on household budgets is very real. The market doesn't have to crash for people to lose their homes. All it takes is a few months of missed payments, rising costs, and limited options. The key takeaway? Don't wait for a dramatic headline to take action. The signs are already here. And the smartest thing you can do is prepare while you still have time on your side. Number 6. Final thoughts and what happens next. The reality is, Australia's housing market is entering uncharted territory, and the next 12 to 18 months could reshape the financial future of millions. This isn't just a temporary squeeze, it's a deep structural challenge affecting banks, governments, investors, and most importantly, everyday Australians. With mortgage stress on the rise, repayment cliffs looming, and living costs soaring, households across the country are being forced to make tough decisions. And while some may weather the storm, others, without proper preparation, may find themselves in a position they never imagined, having to sell their home just to survive. But there's still a window of opportunity. Those who act now have the chance to get ahead of the curve. Whether that means refinancing, reducing spending, increasing savings, or seeking professional advice, early action can make a massive difference. The worst outcomes tend to hit hardest when people ignore the warning signs. That's why awareness is so important. By understanding what's coming, you can protect yourself and your family from the worst-case scenario. No one wants to panic, but pretending it's not happening won't help either. It's about facing the facts, not fearing them. As we move closer to 2026, it's crucial to stay informed, stay proactive, and stay realistic. The market may stabilize, or things might get more difficult. No one knows for sure. But the people who come out stronger will be those who didn't wait for permission to act. They'll be the ones who asked the hard questions, made the hard choices, and put plans in place while others were hoping for the best. So ask yourself now, are you prepared? Because ready or not, the housing market reset is coming, and the time to prepare is already running out. Number 7, what you should do next. Now that you understand what's coming, the most important step is to take action and start today. The biggest mistake you can make is thinking this doesn't apply to you. Whether you're a homeowner, a renter, an investor, or just someone watching from the sidelines, the ripple effects of this housing shift will be felt across the entire country. Start by checking your own financial position. Review your mortgage, calculate how much buffer you have, and be honest about your ability to handle rising repayments or job instability. This isn't about fear, it's about being financially smart in uncertain times. If you haven't already, it's also time to get serious about budgeting. Track your spending, cut unnecessary costs, and look for ways to increase your income or savings. Even small changes can make a big difference over time. If you're a renter, think about how this market shift could affect your lease renewals or rent increases. For investors, now's the moment to reassess risk. Is your portfolio diversified? Could you weather a few months of vacancy or a drop in rental yields? Don't wait until you're in crisis to start planning. The earlier you prepare, the more options you'll have. And finally, stay connected and informed. The situation is evolving fast, and new developments, from Reserve Bank decisions to government policies, could impact you in unexpected ways. Subscribe to financial news, speak to advisors, and engage with communities that are actively discussing these issues. Most importantly, talk to the people around you. Share what you've learned and encourage others to prepare too. Because this isn't just about surviving a housing downturn, it's about building financial resilience for whatever comes next. And those who prepare now will be the ones who come through stronger on the other side. Number 8. Your next step starts here. If you've made it this far, you're already ahead of the curve, because the first step toward protecting your future is understanding the risks. But now it's time to go further. Information without action won't change anything. The next few years will challenge many Australians, but you don't have to be caught off guard. What you do today, right now, can determine whether you're forced into financial hardship or stay in control of your future. Don't wait for another interest rate hike or another warning in the news. Start preparing while you still have time and options. If this video opened your eyes, make sure you do something with that knowledge. Talk to your lender, recheck your budget, sit down with your family, and have honest conversations about your finances. These aren't easy steps, but they're necessary. The people who act early are the ones who get better deals, make smarter decisions, and avoid panic moves when the pressure hits. You don't need to have all the answers right now, but you do need to get moving. Financial resilience isn't about being perfect. It's about being prepared. Before you go, make sure you like this video, subscribe to the channel, and share it with someone who needs to hear this message. Comment below if you're already feeling the pressure, or if you've taken steps to prepare. Your experience might help someone else. And don't stop here. We've got more videos coming that will help you make sense of the changing economy, manage your money smarter, and stay informed through the tough times ahead. Because knowledge is power. And in this housing climate, it could also be the key to keeping your home and protecting your future. Number 9. A quick but important reminder. Before we wrap up, it's important to remind you that while this video is based on real data, expert forecasts, and current trends, it is not personal financial advice. Every household situation is different. What works for one person might not work for another. That's why, if you're feeling unsure, overwhelmed, or just want clarity on what your next move should be, the best thing you can do is speak to a qualified financial advisor. They can help you understand your specific risks, explore your options, and make decisions that suit your goals and circumstances. It's also worth remembering that the housing market, like all markets, moves in cycles. There will be ups and downs, surprises, and moments of uncertainty. What matters most is how you respond when things change. If you stay informed, stay calm, and take action early, you'll be in a much stronger position than those who ignore the warning signs. This isn't about panic or fear. It's about being realistic, being responsible, and doing what you can now to create stability for yourself and your family, no matter what the market does next. Finally, thank you for taking the time to watch this video all the way through. The fact that you're still here means you care about your future, and that puts you ahead of most. If you found this content helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss our next deep dive into Australia's shifting economy. And if you know someone who could benefit from this, share it with them. Sometimes a single video can start a conversation that leads to real, life-changing decisions. Let this be that moment, for you and for someone else who needs it. Number 10. The bottom line. In the end, this isn't just a story about rising interest rates or economic forecasts. It's about real people, real homes, and real futures hanging in the balance. The signs are clear. Australia is on the edge of a housing reset that could affect millions. Whether it comes in the form of forced home sales, rising mortgage defaults, or increased financial stress, the pressure is building. But this doesn't have to be your story. By facing the facts, taking action, and staying informed, you give yourself a fighting chance. And that matters more than ever right now. It's easy to feel powerless when you see these trends unfold in the news. But remember, there are things you can control. You can control how you manage your money, how soon you respond, and who you turn to for advice. You can choose to plan ahead rather than hope the storm passes. And when others are blindsided, you can be the one who stayed ready. Not just financially, but mentally. Because being prepared isn't just about having money in the bank. It's about being aware, adaptable, and focused on what matters most. So as we close this video, take a moment to think about your own situation. What can you do this week, not next year, to reduce your risk? Is it a call to your lender? A deep dive into your spending? A conversation with your partner or family? Small steps today can prevent big problems tomorrow. You have more control than you think. And no matter what the headlines say, your future isn't written yet. You're writing it with every decision you make. Start writing a stronger chapter now, while you still have time on your side. As Australia approaches one of the most uncertain chapters in its housing history, the difference between those who struggle and those who stay afloat will come down to preparation and awareness. We've walked through the rising risks, the critical 2026 tipping point, and the steps you can take now to protect yourself. This isn't about fear. It's about being smart in a changing world. Millions of Australians are about to face financial pressure like never before. But if you've made it to the end of this video, you've already taken the first, and most important, step: getting informed. Remember, you don't need to have all the answers today, but doing nothing is the biggest risk of all. Speak to your bank, check your loan terms, review your budget, and make a plan. These small decisions, made early, could be the very things that save you from bigger consequences down the track. Stay alert, stay focused, and keep learning. Because the people who come through this, the strongest, won't be the luckiest. They'll be the ones who planned ahead.